All right, in this video, we are going to discuss how to identify a trend using the markets. The last time we did this, we were using the whiteboard and we discussed how we can identify trends using impulse and corrections. That's Elliott waves. So when we're using impulses and corrections, we are using Elliott waves, and we also use Elliott waves rules. All right, so in this video, we are going to show you how to identify those impulses and corrections in the actual markets. All right, so right now we are on the 4-hour time frame. Now remember, what you see on the daily time frame, weekly time frame, monthly time frame, 4-hour time frame, 1-hour time frame, is all the same. However, for now, we are going to use, let's say, this 1-hour chart is our example. All right, so as we all discussed, when you are trying to identify a trend, you first look with your own eyes to see, is market moving up or down? Right now we can see market is moving up. As you can see, market is moving up. If market was moving down, we should be seeing it going down. But right now market is moving up. So if market is moving up, we know that market is in an uptrend, right? But then not, this is a 1-hour time frame. So it all depends with what time frame we are looking at it. If we were looking at it on the weekly time frame, we will not be saying market is moving up. All right. If we go on the weekly time frame, we can see market is moving down. As you can see, market was moving up, right? It reached a high, right? And then it went down, right? And then it went to retest, and now market is moving down. All right, so those are things that you need to be aware when you're looking at markets. Always be aware of the time frame that you are looking at. If market is saying it's an uptrend on the 1-hour time frame, that does not mean that market is saying it's an uptrend on the 4-hour time frame. So always be careful with that. We are going to be using the 1-hour time frame as an example. So keep that in mind. We are using the 1-hour time frame as an example. We are not saying that market is in a bullish trend. We are just using it as an example. And this is a minor trend. The same way there's a major trend, there's a minor trend. The same way there's a major zone, an important zone, a strong support or a strong resistance, the same way we can have a minor zone, a minor support and resistance. All right. So right now we can say, all right, we have identified the market made a low, right? What did market do after it made a low? It went higher, all right? So market went up. When it made a low, it made its first impulse. After every impulse, what do we get? We get a correction, all right? So let's mark the high that market gave us. We have a high that market gave us. On that high, what did market do? Market gave us a correction. What we have? We have a correction. Remember, we said market can do anything it wants between the high and the low. And this is between the high and the low, and market did whatever it wants until it initially broke the high. It broke the high. All right. As we can see, market broke the high. It retested as it should, and it went higher. All right. You can even say it went all the way up. All right. So actually, let's change the colors. All right. We have an impulse, a small correction, and an impulse. All right. So this whole move was one move. Market went up, right? It made a new high. All right, we can highlight that high. Let's highlight that high. Market made a new high. All right, so what are we saying? We are saying market did 1, right, 2, and 3. All right, so if market did 1, 2, and 3, what can we expect it to do? We can expect market to give us 4 and then 5. So if market is going to give us 4 and then 5, that means where we are right now is not where market should be ending. We can't expect a reversal just yet. So we can expect 4. This is 4. Remember, this is our high and this is our low for 3. This is the area that price made the low 2, right? That means that's the low for 3. And this is the high for 3. If that's the low for 3 and that's the high for 3, let's highlight that. All right, we have the low for 3. A low for 3 is 2. That's the end of your correction, the beginning of your new impulse. So what you're doing is you're looking at the end of your correction as the beginning of your next impulse. All right. So if that was our low for 3, what do we expect? A high, right? We have a high. There we go. So market can do whatever it wants in this area, right? As long as it doesn't break the high and the low, that is all 4, right? And for it to give us 5, it can make a low right here. That's acceptable. But for 5, for us to recognize 5, price needs to break the high. And until it breaks the high, we are saying market is still in a correction. And that will give us 4, the low 4, and that's the beginning of 5. All right. So firstly, how to identify trend is to look with your own eyes. Don't rely on support and resistance or trend lines and all of that. You need to trust your instincts, your gut, your eyes. What are you looking at? I'm looking at my market moving going up. Where is the major move? Where is the lesser move? Where the major move is, that's your impulse. Where's the lesser move? That's your correction. All right. If we were to go on the 4-hour time frame right now, what do we have? We can see with our own eyes that market was moving down, right? Market was moving down, right? For some time, market was moving down. If we look at this high, we can see the market went all the way up. And now we can see there is some sort of a rejection. So we need to see what is market going to do around this area. Is it going to reject a little bit more and then go higher, come back and test the last breakout? Or is it going to reject where price is at right now and continue going higher? Or price is price going to reject this high we are at right now and go lower? All right. So what was the trend? We had a bearish trend. After that bearish trend, what did market do? It created a low, right? And then it went higher. So we have a minor trend. As you can see, this bearish trend was a bigger trend, right? Compared to the trend that's going higher. So that means on a higher time frame, price is on a bearish trend, but minor trend on the lesser time frames, price is going higher. So what could that tell us? Maybe price is doing a correction on the higher time frames. So if we go on the daily time frame right now, what do we have? As you can see, price was going down, right? Price was going down. And what do we have right here? We have a minor correction. The same way we have a correction, the same way we have a correction. So the best thing that we could do right now is to try and identify our trends using Elliott waves. So what does that mean? We have possibly 1, right? We have 2, we have possibly 3, or could we say 3? We have 4 and then we have 5. So if we see five waves, they have already been hit. That means price is most likely going to create a new bullish trend in the meantime. 1, right? Maybe this is our 1. Maybe we could get a 2. Maybe we could get a 3. Maybe we could get a 4. And maybe we could get a 5. All right. So this doesn't necessarily mean that price is reversed until price breaks the high on the beginning of our third impulse. Then we can say price is reversed. At the moment, we cannot say that price has reversed because price could be creating an impulse, or price could be creating a correction for the higher time frames. All right. So whatever you are seeing on a 1 hour time frame without looking at the higher time frames, you can't trust that. You need to look at higher time frames first and then break it down. So the higher time frame levels will make you understand that, okay, price could be going higher, but it can only go higher to a certain level. And then from that level, it should reject. But then if you see price not rejecting and it continues to go in that direction, then maybe possibly the trend is reversing. So use the higher time frames to your advantage before you go on to the lower time frames. All right. So we are going to end there for now. And then the next video, or the next time we all meet, we are going to talk about the rules of Elliott waves. All right. So for now, we have showed you how to identify the trend using the markets. The last time we were doing it on the whiteboard, and now we've used it on the markets. The next time we're going to discuss the rules of Elliott waves. All right, that's all for now.